Good to see you, Brad. Thanks for being here.
Tony, thanks for having me.
And thanks for wearing a collared shirt. I just want to mention that, we do occasionally we'll get a CEO on here, and I don't want to name names, but Cheryl Penny, and he'll wear like a Dynasty t-shirt. So it's just, I'm always pleased when someone actually takes the time to, we don't ask anybody to stand up on this show, realizing that, with the pandemic, we have to make certain allowances.
I'm trying to keep the local businesses supported, including the dry cleaners. So I do like to wear these shirts and send them out.
Yeah, me too. That's all good stuff. Well, so you've had an interesting journey from San Diego to New Jersey. It's slightly unusual. Were you looking for the sort of better weather, or maybe you just like the rain or the snow, or what was the reasoning behind it?
It was seasons, Tony. No, actually, a great opportunity to be the president of Prudential Advisors. I had worked at Charles Schwab in their RIA business, and then spent about 10 years at LPL in the independent advisor business. And at Prudential, the value proposition for advisors not only was different from what I had a history with before, but so compelling just given the businesses that Prudential is in and the overarching value proposition with the national footprint. So packed up the bags, 2 dogs, 2 kids, a move from San Diego to New Jersey. I wasn't sure they were going to join me, but they did. They're here, actually.
Well, that's good news. You can actually surf in New Jersey. People don't know that, but you actually can. There are a lot of people who do. It's kind of lame surfing.
Yeah.
They do it. So there's also a dog behind you I saw that was drugged. I don't know if you want to show the audience. It's very quiet. I put my 2 dogs outside so they wouldn't bother us, but that's my dedication to my profession. So you made that move. I want to sort of get into it because I'm interested to see how, having worked on the RIA side, one of the things that I think are, well, let's just get into it this way. So one of the things I think it's a big issue in the RIA world, and look in the brokerage, world in general, is that we ignore insurance. And obviously Prudential, you're going to tell me it has all this great financial services, right? I agree they do, but insurance is still a big part of the world. And you can't do estate planning without insurance. You can't do anything without insurance. So did that factor into your plans? I mean, it's amazing how you can help clients with insurance. It's amazing how you can, how advisors can help their businesses by doing it. They're ignoring this very, valuable piece of business.
Yeah, I have found in the financial advice space that there are some advisors that, in my opinion, don't do a great job of focusing in on risk management. Yeah. And having worked in the investment advisory space, many advisors focus on accumulation, mainly around asset management, but maybe sometimes don't take into account the full spectrum of things like lifetime income or insurance products that can help round out a financial plan.
You're being too kind. They don't ever focus on it. I mean, it's a small group that does. They usually leave it. You're being way too kind. I mean, they leave it in the hands of someone else. So they let someone else handle their clients, and it's actually, it's a tough conversation to have, I guess, insurance. It's different than a sale on security. But at the end of the day, if you're not having that conversation, somebody else is, and it's not a cohesive plan.
Yeah, it's really about, to me, customer versus clients. And if you want to be a financial advisor and really work with a client, you need to be more holistic in your financial planning. That includes insurance, includes annuities, and includes investments and either other aspects of their lives. And I think to your point, having somebody else deal with that isn't the right approach. So Prudential, coming at it from a risk management standpoint, actually gives many of our advisors an advantage in the marketplace. And then we can broaden the relationship to include investments, as opposed to the other way, where we have advisors focus on investments and then either ignore or maybe dabble in insurance.
So there was a time when I was, I started out at Merrill Lynch on, Fifth Avenue, New York. I remember, this is 30 years ago, whatever it was, but I remember we had a guy who walked around the office, and he was the insurance product, guy, and you sat down with him and you worked it out. And then, when the large wirehouses started to get taken over by banks, they got rid of those guys and started having the mortgage people, come through the office and sell those. And I guess they couldn't figure out how to make money on insurance, which is one of the most profitable pieces of business in the world. I don't understand why they stopped it. But when they stopped it, they took a lot of the air and the steam out of that whole risk section that folks were working on. And today they ignore it because it's not brought up. It's not, and if you're an independent RIA, it's not necessarily easy to do. You need to get licensed. You have all these other, hoops to go through. And they tried to make it easy, and then they stopped. And I don't know why they stopped, other than they wanted to make money on mortgages instead,
Maybe, but if you're truly putting yourself out there as a financial planner, and we believe in financial planning as a foundation as well, to ignore the insurance piece and the risk piece, to me, you can't do it. You have to do it. And at Prudential, we have 3,000 investment advisors across the country, located in offices in all the major cities. And we have expertise. So you don't necessarily have to learn it yourself. Insurance can be complicated. But you certainly can partner with people that do understand it,
right,
and can help with complicated insurance situations. And oh, by the way, Tony, you're facing an election here coming up in a couple weeks? What's going to happen from a tax perspective? How does insurance play into that? It gets
that was my next question. Yeah, I mean, because look, potentially the estate taxes are going to change, right? I mean, if the polls hold true and the Democrats so insurance is going to become more important, right? I mean, is there a chance that you think this is going to affect insurance negatively? Or is there any way that's going to happen, or it's all going to be positive?
I actually don't think it's going to impact insurance negatively. And it's actually my hope that more advisors look at the landscape going forward and consider insurance as part of broader financial plans. I think lifetime income and annuitized income is a big deal too, from an insurance perspective. As you have demographics, people are getting older, more and more people are retiring. And that's another area where I think insurance companies can play a role. And then coupled with goals-based investing, I think you're hitting three very important parts of a financial plan for people. And really, as an industry, can we reach more people? Can we help more people? And that's truly, I think, our collective goal, just given where we are as a society in terms of financial planning.
Yeah, I mean, and there are obviously a lot of people who lack, insurance. They don't have any, and some people struggle to cover final expenses or things that come up that are just, very difficult. So, look, I think we agree it's something that has to be done. I'm feeling that the election and the tax situation is actually going to work in favor of advisors who really think about, when you do any kind of estate planning, you need insurance. And so, how am I gonna make this all work? The other question. Go ahead.
COVID-19 has been an environment that has flashed a light on the insurance world as well. We're actually seeing more and more interest in it just naturally, even if it's something, as you mentioned, as basic as final expense or term insurance. There are people who are saying and waking up to the idea that this might be a good part of their financial plan.
Well, you keep taking my questions ahead of me, Brad. So what I was going to say was, you moved from San Diego to New Jersey, but you're in the middle of this crisis, which is, unprecedented in scope, and no one's ever faced this before. How's that affected, I'm talking about your silo of the business at Pru? I mean, how have you guys dealt with it, and what have you seen? That's one thing that you've seen, is maybe a little more interest in insurance, which makes sense, but what else have you seen?
Yeah, we've actually taken the move most recently to combine our digital capabilities, that we work with employees around their financial plans, our W-2 advice model, and our Prudential advisors model, and we actually put them all together. What we've seen is that consumers want to be served in different ways. And at Prudential, we want to make sure we can serve them when, where, and how they want to be served. So most recently, my title changed from President of Prudential Advisors to President of Retail Advice and Solutions, which includes that advice continuum. And then, as you know, somebody may want to buy a term insurance policy digitally, but maybe you would want to work with an advisor on a financial plan in Dubuque, Iowa, on down the road. So making sure that customer experience is first and foremost, and that we can serve consumers across the advice continuum is our most recent update to what we're doing at Pru from an advice perspective.
And that all fits into changes you had to make because of COVID, right? I mean, so you're doing a lot more Zoom calls like this. The advisors, I'm sure, are working like other advisors in a new way.
Yeah, for sure. We have 36 parent offices. Our real estate portfolio is a big part of our value proposition to advisors, among other things. But we had to close it all down in COVID, and it's just like this. Our advisors became completely remote in a short period of time. We had extensive technology capabilities, so we saw business continue. But for many, it was how do you adopt the technology and how do you continue to prospect and serve your clients in an environment like this? Now we're about 60% open again across the country with precautions. So we have made some progress back the other way. But I actually think we'll look back at this time as a positive, really having advisors lean into technology supporting their practice. Maybe some were less willing to do that in the past.
We've heard I've interviewed a lot of CEOs, and a lot of them have talked about real estate and, what's the future of it. So I'm thinking, there are some firms that have a lot of, they may have, 200,000 square feet of real estate across the country, but it's in 2,000 square foot chunks, smaller offices everywhere. And some people have 80,000 square feet in Manhattan and are looking to get 30. Is this going to do anything in terms of, we had some of your folks on the call here earlier that are working from home, is there any consideration to sort of, taking advantage of maybe some real estate opportunities?
We believe in face-to-face financial advice. So giving consumers an opportunity to meet advisors at a Prudential location is something we believe in and will continue to support across the country. Now, do we need gigantic conference rooms and everybody having an office based on what we've learned within COVID? No, likely not. I think we need to rethink how we're using our real estate on a go-forward basis. I think it'll look and feel a little bit different. You might see more screens, more technology integrated within the space, maybe a little bit smaller space as advisors come and go and maybe aren't in the office all day based on what they've learned. So yeah, we're rethinking it, but we're committed to a physical location across the country because that's what consumers like in terms of building those long-standing relationships with advisors.
Yeah, and I'm actually coming to that conclusion, as well. I think it's gonna look different in a lot of places, but it's gonna be very hard to open, high net worth accounts, over Zoom. People are gonna want to meet. They're hopefully shake hands in one day, and certainly come to an office and get that whole experience that clients are used to.
It's a relationship trust business. I mean, You've seen it, Tony. There have been entrants into the advice space. Some of them have been successful fully digitally. But if you stack up low interest rates, a COVID-19 environment, an election, market volatility, we're still seeing consumers who want their trusted in-person advisor to focus in on their situation. And how do you help me? How do you help me as an individual, given all of the things I have in my life? I am a firm believer that model will stand the test of time.
Well, everybody's a genius in a 10-year bull market. And when things start to go sideways, all of a sudden, people need advice. And I think that's one of the remarkable things that sort of the Zoom environment has done is they've sort of seen advisors outside of their normal role. And that's been a good thing. They see them with the dog in the background. They hear the kids around, and that's okay. So and they're seeing their clients in a different way. I don't think it's going to obviate the need to get together ever, in an environment, but I think that's been a good thing. And I think people are so worried, as you said. It's very interesting to me that you're seeing a lot more call for life insurance, with this COVID stuff. It's not surprising. It's common sense, but boy, people are nervous. And other than their health, they're worried about their assets and, what they could pass on to their kids. And people are thinking of their own mortality, too. Yeah. So it's that combination of stuff that I think bodes well for an advisor doing insurance.
Yeah. You know what? We're all human at the end of the day. And insurance is just part of an overarching financial plan. But I think, even not wearing suits anymore, having the dog in the background. My wife was just standing at the door 2 seconds ago. You know what? That's what we're all dealing with. I actually think it's a great thing. We are all in this together. I think all of us have heard that many, many times during COVID-19. And at Prudential, I love our purpose. It's a purpose-driven company. We make lives better by solving the financial challenges of our changing world. That doesn't say we solve them for one person versus the other. This is about, can we create an advice foundation to really help people? That's another reason that you would pack up your family from New Jersey or from San Diego and move to New Jersey if you believe in that overarching purpose. Important.
Well, we're lucky to be in this business, and like I said, everything that's gone on has made advice more important, not less important. So I'm I'm very pleased with that. That's the kind of positive note I want to end on, because because I'm feeling good about that. I want everyone else to feel good too. So, is there anything that I didn't mention or bring up during this call? Because you asked most of the questions that I wanted to ask, but was there anything I didn't bring up that you wanted to talk about?
I've just been so proud of Prudential, how we have handled ourselves during COVID-19 interest rate environment. And from an advisor perspective, we continue to see record recruiting and record retention, just given how the broad value proposition is showing up. So I'm proud of that. I'm proud to be part of it. And I really appreciate your time today, Tony.
Well, you're welcome. And I'll make, one other shameless pitch for you, which is that I'm passionate about insurance. And I think advisors who don't have it in their playbook are making a terrible mistake. And not only for their clients, but for their business too. I mean, let's just talk about an advisor building a practice. You're leaving out all the risk side of the ledger when you don't talk about insurance. Not only you're hurting your client, but you're really hurting your practice. It could be a revenue stream equal to or greater than what you're doing on the other side, and that just hurts everybody.
It's a key part of a robust financial plan for sure.
No question about it. Hey, thanks for being here.
Yeah, appreciate you having me. Be well.